That was a very negative sign. So the technicians out there were saying, well, if it cannot reclaim and get back up there pretty quickly, then we're probably going to 10 to 13,000. The very positive signs that we've surfaced is that the 200-week moving average of Bitcoin, remember Bitcoin peaked close to 70,000 last November, and it got down to somewhere in the $17,000 range very recently, and that broke the 200-week moving average. So that was a very negative sign. So the technicians out there were saying, well, if it cannot reclaim and get back up there pretty quickly, then we're probably going to 10 to 13,000. So it has reclaimed the 200-week moving average, which is a little bit above, I think, 21 or 22,000. So that's reassuring. We've seen some stabilization there. And the decline this time around, believe it or not, it was pretty intense, but was not as steep as it has been in the past. Normally it's more than 80% decline. So this was close, but we didn't quite get there. And then the other reassuring piece of news recently that came out was an agreement yesterday announced between BlackRock and Coinbase to partner so that BlackRock could, through its Aladdin Technology Solutions ecosystem, on which $40 trillion worth of assets sit, they wanted a seamless on-ramp into crypto that Coinbase is going to provide. So this is another legitimization of Bitcoin and crypto generally as a new asset class. Some of this may have been caused by demand pull, institutions saying, hey, we want to get involved, but the plumbing was just too difficult. So that's good. We did a study on institutions moving into crypto. You can see it in our Big Ideas 2022. You can see the picture. And if we're right, that 40 trillion just from BlackRock's platform hosting other institutions, that would translate, if you just took our study, which basically said if you want to access crypto, but you want to minimize, you're more focused on minimizing volatility than increasing your Sharpe ratio, then you would put 2.5% into crypto. And if you're more interested in the Sharpe ratio, so returns per measure of risk, than you are about volatility, you'd put 6.5%. So assuming that 2.5% on this $40 trillion platform, that's $1 trillion of demand. Now, it's not that, and that would more than double the Bitcoin price right there if we just assumed it was all done in Bitcoin, which this agreement is only focused on Bitcoin. Now, what that misses, however, is what we call illiquid supply. There are hodlers out there, holders for dear life, or I've forgotten what that's all about, hold on for dear life. And so the illiquid supply, according to our estimates, is about 14 million out of the roughly, I think we're into near 19 million, 18 to 19 million Bitcoin outstanding. So illiquid, 14 million. And by our calculations, only 3 million units are truly liquid. So the demand, if we were to see a $1 trillion increase in demand, then it would probably drive the price up much higher than the doubling that I just mentioned. I think that innovation is leading the way as it usually does as we're exiting a bear market. And we don't know if we're through with this bear market or not. We could be in a trading range, who knows? But I'm very gratified to see the leadership has shifted back towards growth, and especially towards innovation. We are always the new leadership, almost by definition. We're focused on the future. What is the world going to look like, instead of on the past, which is what most what passive strategies and even benchmark sensitive strategies do. So hopefully this is a good sign that we have, I know it'll be volatile, but that we are on our way again.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video, link is in the description. Thank you.